or what happened over the weekend, but let's change it up. I'm just going to talk about my strategy. Take a deep breath. This is how I attack each day. First thing I do is I give myself a daily reminder to be patient, not to be over aggressive when trading this market, especially in these times. You have one entity or one institution telling you the market's going higher, you have another institution telling you the market's going down. Or so have a daily goal. For myself, my daily goal is somewhere between $500 and $1,000. I want to start slow. So when I do enter into a position, I'm buying one or two contracts, and then I'm going to wait for momentum. I'm going to wait for the market to tell me the direction, and then I'm going to secure profit and call myself a winner. That's what I do every day. Let me just go to another slide here. Next, you want to find a winnable trade. You want to comprise a strategy around a winnable trade. You don't want to have a pre-position saying, okay, I'm going to go into the market and I'm going to trade Disney calls today and Disney's going up today. You're not looking for a home run. You're looking for base hits. When you look for a home run, you generally end up on the wrong side. So I'm just going to mention, like I mentioned Disney real quick. I'm going to bring up Discord. You know what? Before I bring up Discord, I'm just going to talk about the special that we're having. From now to the end of the year, we're no longer doing 7 free trial days. We're just doing half off. So instead of paying $35 a month, if you want to join the Discord, you're $17.50. Now, what does Discord get you? Well, this is how I analyze the market every day. So I'm going to pull up Discord and just a couple of things, because I was like, okay, well, if the market is looking to bottom, I'm going to look at Disney, because I thought Disney had some institutional buying. But then I look at the open interest of the Disney contracts. Premiums, they're paying $8 million for the puts. They're paying $150,000 for the calls. So there's no interest in calls. You have a 6-to-1 ratio of puts to calls. Open interest, you're about 3-to-1. So as you can see, the puts really outnumber the calls, still extremely bearish on Disney. And then I'll look at the net flow of Disney, again, using Discord, and it's telling me the costs for puts are still going higher. The costs for calls are hovering right here, and the stock price is going. So it's still bearish. And if this is bearish for Disney and Disney's looking to bottom, I'm going to do the same thing for Apple, because Apple and Disney, Apple basically is tech for me, and the market, Disney, is more of a Dow-related play. But let's look at Apple right here. Again, call premiums up here, stock price wavering, put premiums increasing. There's still a ton of buying into Apple. They're going to continue to buy Apple. So when I talk about Apple, and I'll bring you up the chart, here we go. You're looking at the open interest. Open interest, 2 million puts, 1.2 million calls, volume extremely stronger on the put side. So again, makes me weary. It could be a hedge in the market. Understand, anytime you look at live trading or you're using analytics and you're looking at bearish flows, bullish flows, some type of divergence, it can always be a hedge bet. So it upsets me if you follow people like Cheddar Flow on Twitter. They'll put a posting up or a dark pool posting, and it'll confuse the shit out of the retail trader, because you're like, oh, okay, they're extremely bearish, but the market's going higher, or they're extremely bullish, but the market's going lower. So you have to understand, a lot of these positions are hedge positions. Say you're in Apple, say you're in Disney, meaning you're an institution and you own millions of shares. What are you going to do to protect your downside? Well, first off, you might sell calls to protect your upsides. You might sell the 145 calls. You're in at Apple at 134 and change. And then what might you do? You might take some of that premium money you just made and you might purchase puts. That way, if Apple goes down and contracts a little more, you're still safeguarding yourself, because you're making money from your options. You're making money from the premiums you're selling calls. And then the stock is going down to offset the money that you made. All right, now we're talking about big money traders, okay? So I'm just helping you understand the analytics, or what happens when you use Discord and you look at different options. Another thing I like to do, and I'll pull it up right now. Let me just get back to Discord. Is I like to look at the top flows. So I'll type in TR top flow. Let's see what comes up. Okay. Top flows. Let's just make sure it's on there. Yeah, nice and big. All right. So you're looking at top flows. It's showing you bullish for the SPY, bullish for energy, bullish for Apple, bullish for Russell, NVIDIA. Again, the SPY, Ford, Alibaba. Where are you bearish? Okay. You're bearish on Moderna, AMD, Microsoft, EEM. These are the type of flows that are going on. The Moderna one kind of upsets me because I'm in a couple of Moderna positions, but Moderna's up 3.5% pre-market. So we'll see how that plays out. But now that I'm actually looking at that, I'm going to look at secure profit on market open for that trade because obviously the market sentiment is against me on that trade. All right. So again, find a winning trade, find a winning strategy. My winning strategy, I thought Moderna would go up this week. I thought the market would bounce Monday morning. Let's remember the option. Let's pull it up. That way I can just share with everybody. We'll go back to Discord. We're going to go back to my room on Discord and talk about my alerts and what I see. So let me just pull that up. All right, here we go. Okay. So these are some posts I made over the weekend. As you can see, the black line is 2022. We're eerily similar to 2008, the market collapse. So would it surprise me if the market dipped like this? Not really, because history tends to repeat itself. So yeah, I'm still somewhat bearish. I did think we were going to get a bounce. I made a SPY prediction when the SPY was sitting at 391 and change, low 391 on Friday afternoon. And I thought we were going to finish around 394. I bought some calls. What happened? First off, on my calls, I went out till Wednesday. The SPY shot up to 384, 385. The calls went up to $5.75 from my entry point, which was $3.85. So again, just have to have a strategy. Now, why did I think we were going to get some type of a bounce? And why did I carry that position over to this morning thinking that we were going to get some type of a bounce in the SPY? And I'll show you real quickly. Let me just remove this. Stop sharing. Let me present and add another screen to it. Let's add the SPY so we can look at that together. And then we'll talk about the SPY ranges so we know where resistance and support could be today. Let me add it to the stream. Okay, great. Let me make it nice and bigger. Okay, great. Let's go back till Friday's day. So we'll go to the 1 minute. Let's go to the 3 minute. Here we go. Okay, so I saw some buying picking up. I was sniping using the 1 minute chart right around here. When I saw there was interest, again, I went into my calls. I went out till Wednesday. Why? Because there was such bearish, flow on the market. I'm not sure why my wrong camera's hooked up today, but we'll fix that next time. Okay, so we ended up going. We saw some resistance at 385. We saw some support at 383. Let's talk about the larger picture and the larger ranges. Okay, so I'm going to talk about the SPY. Feel free to write this down if you'd like. I'm going to talk about support and resistance. How that's going to help you is, if there's resistance on the SPY at a certain level, it's meaning once the SPY hits that level, once the market hits the top level, every stock is going to have bearish pressure. The same is true if the SPY finds support and today turns into a green day. You have to know what the bottom is. So if you're looking to get into calls or sell your puts and get out before the market goes up, or vice versa, the market goes down, you want to get out of your calls, you have to use the ranges of support and resistance. So let's go right into them, okay? We'll start on the top side and we'll work our way down. Again, there was major resistance at $392.50, which is a whole 3% higher on the SPY. So we're not really going to pay that much attention to that unless the market shows a dead cat bounce at some point this week and then we're green, green, green. You're looking for the market to reject each of these points. So again, 392.50. When we go under that, we're looking at 389 or slightly there under. It's like 388.67, but 389. If 389 is acting as support, then you're going to the next, resistance, then you're going to the next level down, which would be 385. So the fact that we were trading right around 385 on the SPY towards the end of close on Friday and pre-market this morning tells me that we're probably going to revisit 385. Although the SPY is trading, and let's see where it is pre-market. Pre-market, we are at, here we go. We're at 383.47, up slightly. Again, there was a nice sell-off from the 385 point right around here, all the way down to 384. We found support on the bottom at 383. So that's why it would not surprise me if 383 acts as support, okay? So let's just go back. 385, next, 383. Under that, we break under that, you're going to see 381. Understand, if we trade a narrow day in the markets today, we might trade somewhere between 382 and 385 and just stay in a very narrow range. Anytime we're having an inside day and we're trading a more narrow range, you have to make sure your entry and your strategy is that much more accurate, because it's not like a volatile day where we're shooting up and then dropping down significantly. If we're doing that, then there's more range for you to make money. You don't have to call the absolute bottom the absolute top. Entry still is important, but it's more about your strategy. Okay, so we're going 385. On the way down from 385, you're looking at 381. If 381 breaks support, then you're going to see 380, 378. So let's just do a bear case scenario for this week, okay? SPY is sitting at, and this is just not my opinion right now because I think we might see some sort of dead cat bounce earlier in the week. But understand, 385, under 385, 383, like 23 has been a little support. If not, we will break down to 381. So I think we're going to trade in between this range. If we break below 381 on the SPY, and this week is still a stressful week for the market, it's still a bearish week for the market, then you're going to see 378 on the SPY, and under 378 would be 375. Now, 378 is a key level for the SPY because there's been support there historically. When I say historically, I go back about 3 months and there was some major support, major buying at 378. So again, even if the market drops, I would be looking for support first at 381. If 381 doesn't show support, at 378. Okay, vice versa. Let's go for a bull case scenario. Let's say there is a Santa Claus rally, okay? So what's likely to happen? We're likely to find a base of 383, 20 something. If we drop down to 381, shoot up to 385. Okay, once we trade that narrow range, if there is consolidation, then I'd be looking for 385 to push up to 389. Again, and if we push 389 and there's still bullish momentum in the market, again, this is bull case scenario, then we're going to see 392.50, 395, and possibly 399. Okay, that would be if we have this Santa Claus rally. How could we have a Santa Claus rally? Well, earnings can come out. They could actually beat. Forecasting can come out. It could be not that bad. People can talk about recession and that how the likelihood of us going into recession here in the U.S. is coming up a little bit. Whereas overseas, I'm pretty sure the UK is already in recession. China is likely headed to recession unless they flip their numbers really quickly. Consumer sentiment in our market still is extremely poor right now. So again, that's why there's bullish sentiment. Okay, so we spoke about the SPY. We did speak about that on Friday. Tesla, not that interesting this morning. China economic slowdown, pump and dump. All right, I'm going to talk about a few stocks that I'm looking at then before we move on. If you have any questions about your stocks, please put them on the sidelines. If you like what I'm doing every morning, please give me a thumbs up or make a comment. YouTube is all based on algorithms. All right, so again, I'm looking at certain stocks on my watch list. So a stock I added to my watch list or an ETF is DIP, which is DIP. And what this ETF is it actually goes and uses algorithms to buy the dip. It just started last week. So that's something I'm watching. Understand, if the market keeps going down and we're headed that way and we're headed back to like 360, 365 on the SPY, buying the dip is a terrible idea. However, if you think the market is bottoming or at least consolidating and you do think we're going to push higher in the upcoming weeks, then dip sounds kind of interesting to me. Okay, then I've got BOIL, BOIL, which is a natural gas ETF. It was off 7% on Friday. They were buying it, meaning there was inflow into that ETF. However, this morning, it's off another 8% pre-market, meaning natural gas is getting hurt. So what am I looking at as far as natural gas? I mean, I can just show you really quickly. Here's what the chart looks like. They're still selling it, even though it is going higher. Again, losing 7% on Friday, 8% this morning. I might look to enter into a natural gas position just off this morning drop, okay? I can secure myself a good position, say to myself, let me look at the 5-day chart, thinking that we might end up back over in this range right here where we tested about 3 days ago, which would put us somewhere around 37. So as we're this morning around 31, I could be looking for a 20% gain sometime later this week in natural gas as far as the BOIL ETF is concerned. So again, it lost 7% on Friday. It's down 8% pre-market this morning. I'm not going to fight momentum, but I am going to say to myself, okay, depending on if the market gets beat up or not today, or when the SPY finds some support, might be a good entry for me to jump into a couple of BOIL calls because BOIL is beat up and I can see it bouncing 20% from where it is. Then I'll look at Meta. Meta has some downward pressure. So Meta's pretty tricky. Last week, analysts upgraded Meta. And what did they do? Every time Meta spiked, they sold into the spike. So understand, when analysts sometimes upgrade stocks, they have other intentions behind that. Sometimes to clear off their position. Next, I'm looking at Apple. Apple at 135, and that's probably exactly where we are pre-market. 134.99. So Apple at $135 a share has been a support level. So when we talk about Apple being bought, and I showed you on the Discord algo and flows chart that Apple still has support at 135. Yeah, it could go down to 134, 133, 132, but there's been major support at 135. So I would actually look to take a longer term Apple position starting this week. Yeah, if the market gets beat up some days, I could use quick scalps for Apple, or I could take a longer term position, go out to like a June or July of next year, saying that Apple has major support at 135. So we'll see. So Apple's at 134.87. The low from Friday was 133.73. So I'm saying to myself, okay, somewhere in the 133.73, if it goes down there this morning, that would be opportunity for me to jump in or at least get a starter position in Apple. I've mentioned Disney. Now, Disney was extremely beat up. And in fact, going back a number of days, you can see the Disney chart. You can see the spike right around here. And I said Disney was getting a new CEO, but that's not really news that's going to help earnings. In fact, Disney was losing over $1 billion streaming. And I was like, there's still outflow, even though Disney's going up. So, Disney, it's more of a watch, wait and see. Again, you can see the chart. You can easily go back up to the 106 level. But if the selling continues, I can easily see Disney back at like $86 or something to that extent. So have two strategies in mind. What other stocks? I was looking at Carnival. Again, I mentioned last week that Carnival had some support in the $8.70 range. There's been major outflow. I've seen it as low as $7. So again, for me, I'm not going to get involved, but I'm watching Carnival because when institutions start purchasing Carnival and the airlines again and things of that, that tells me the Dow is going to stabilize. So these are more of trackers that I'm using right now. Again, Plug last week. I mean, we're talking about 4 days ago. 5 days ago, Plug was at $13. It shot all the way up to 16 and change off of one day. And then what happens when something shoots up? They sell it off. It happened to Lucid as well. Lucid went up to $8.50 something cents. I said Lucid puts to the beginning of last week. Lucid went all the way down to $7.18. So you're looking for spikes in certain stocks that really don't deserve it. That will tell you there's manipulation. That will tell you some institutions taking a large position. That will push the stock. Again, SPY sitting right now, heavy outflow last 3 days. We're sitting at the morning low after we gapped up. Again, SPY sitting at 383.52. So next level down where I'd look for support is 381, which was the low on Friday. Again, this is the chart I'm looking at. So we could easily fill that gap that we gapped up from overnight from Friday to Monday. I'd be looking for 381 on support. If the market decides just to dip and then go forward from there, then you're looking for it to reject 385 again. And that's what I'll be watching carefully. I see somebody is asking about Cassava. Cassava Sciences, which is Sava. I'll bring it up on the screen real quick. Here's the question. What do I think about this stock? So this is the tough stock because this stock has been heavily shorted. And we saw a run up last year. I think it was like $18 all the way up to 132, and then 132 all the way down to 60, 60 down to 30, 30 down to like 16 again. Now it's back at what, $38. So, I mean, you can see as the market continues to sell off, okay, if the market is continuing to sell off and there's more outflow days, then Sava could actually go back down to the $34 range, which is probably about 17% off of where it is right now. However, after the last 3 days, if you exclude those where the market was just heavy sell flow, there was buying at Cassava. There was buying from the $33 range, pushing it all the way up to $44. So you're talking about a move of 33%. So that's kind of consolidation I'm looking for. Same with, I mentioned it, Moderna. Moderna went from 174 all the way up to 215, which is a 40-point gain, which was like 25%. There's got to be some consolidation. Nothing goes straight up. Nothing goes straight down. So when you have a stock like Cassava, or even Lucid had that pump, or even Moderna had that pump. You look to enter the opposite side when it comes down to consolidates. You're looking to get back into bullish, bullish sentiment. All right, let me just see if we have anything else. Mini futures. I don't really talk about futures. So everybody is more than welcome to join us on Discord. Please pay it forward, like the broadcast. I'll be back tomorrow morning at 8:30. No real and crazy numbers this week. I'm looking more at earnings. When earnings come out, forecasting, we're looking to see anything that the Fed might say. There's some talk about Elon giving up control of Twitter and hiring a new CEO. I happen to think he's just screwing around, so we'll see what happens there. Watching Tesla, Microsoft, Apple today. Those are my trackers. Have a great morning, and I'll see everybody on Discord probably in the next 5 or 10 minutes.